I'm Samuel Miele,
I'm Scott Fishman,
and this is the Student of the 21st Century podcast,
where every single week we're going to talk about all the things that school didn't teach you.
Are you ready to graduate?
Tune in for a new episode every week.
We'll see you there. Ladies and gentlemen, welcome back to the Student of the 21st Century podcast.
I'm Scott Fishman.
And my name is Samuel Miele.
And today we're talking about cash flow.
The hardest thing on the planet. No, I'm just kidding. But for me, it is hard.
Especially when you're not good at math.
Yeah, I failed math twice in high school. Listen, it's not easy, except this is where me and Scott work. Scott, what makes us different than each other?
Yeah, we're polar opposites.
Absolutely.
I run everything I do from the numbers, and you run everything you do from...
Well, I mean, emotion, people.
Right.
Sales.
Which is great.
It works. And here's the thing. I think it's easier for a personality like me to start a business and bring in more money right out the get-go.
100%.
But you're the personality that manages $100,000 a month.
But it also makes it that much more challenging to grow.
Very accurate. Okay, Scott, because I remember when I was building my business, I just said yes to everything and I just went right out the get-go and just charged what I thought I could get. I never broke down my costs. I maybe said, it's going to cost this much for this, and I charge myself out at this hour, and da-da-da-da-da-da. But then there's so many nitpicky little expenses like, oh, congrats, you just spent $40 a month on your music licensing software, and that's not factored into your costs.
Yeah.
Why? Can you talk about that?
Well, it's funny because we were at a conference back in August, and somebody said in this industry, and I think it's pretty much sales as being an entrepreneur across the board, you'll get $25 to death instantly.
Absolutely.
Because you just don't see it and you don't feel it, unfortunately, that, you sign up for this, you need this. This is $25. This is $25. And before you know it, you're spending $1,000 a month on stuff that you don't even know that you have. So this is where we very much differentiate, because you are very good at the building the business from the personal side of things. I am not as good at that part of the business, but I can tell you exactly what my cost is to list a house, for example, down to the cent.
So what are some things that people, I'm genuinely curious because this is an area that I don't necessarily specialize in. So I'll try to bounce off you with maybe some thoughts on the emotional side, because I'm sure we'll talk about raising prices with clients, how to do that. See, I can tell would more just be like, hey, this is your new price.
Right, but that's what makes it so hard, though, because I don't feel it from the emotional standpoint. So, for example, I made a decision very early on in our real estate business that we wouldn't cut commission because I knew what our value was. So when we go out, I actually break it down as to this is how much this costs, this is how much this costs, this is how much this costs, and this is why our value is there, because we are spending X on your house or with you as a buyer. So it is important, and it's an important piece of our business because that's how we show people our worth.
It's true. Okay, I was just writing something down. I have a good question for you. But first, let me kind of talk about my experience with it. So I had a spreadsheet way before I even really dove into my expenses and my accounting and got an accountant. And I did my best to manage my expenses. And I did a pretty good job for being in high school. The area that I went wrong was separating or not separating my personal and my business expenses. And the biggest problem with that was at the end of the tax season, I pulled in like 67 grand at 17 on my own. And my accountant was looking at me like, one, you didn't charge for an HST number, right? You didn't manage your HST properly. Two, on top of that, you never actually showed any profit.
Right.
So can you talk about managing your expenses? What should people be doing right out the get-go? What's the easiest way? I mean, I don't think QuickBooks is going to be the quickest way right out the get-go to do that.
Yeah, so what I did when I first started was kind of the same thing. I put everything in a spreadsheet, all my income, all my expenses as I went. So every single week I would go through my credit card on the RBC app and look at what I had spent that week, what was business, what was personal, and put it in a spreadsheet and then color code the whole thing. So personal was blue and business was green, or it doesn't matter what your colors are, but that's how I was doing it, so that at the end of the year, I had two different columns. I had a personal expenses column and a business expenses column. And then we finagled it as we went. Hope you're not listening CRA, because that wouldn't be good. But as self-employed people, that's just one of the perks that we have. But that's kind of how I did it. And I would color code everything on a weekly basis. I'm anal, so I would do it every day, but most people won't do that.
Okay, wait. Can you explain write-offs?
You don't even know what a write-off is.
Do you?
No, I don't.
But they do.
Yeah, so being self-employed, we have the luxury, which Sam knows now, of writing things off. And what that means is basically we bring income in, and the counter to that is that when we spend money on the business, we can write that off as a business expense. So what does that actually mean is that it comes straight off our income. So let's say I make $1,000 just to make it easy, and I spend $100 on something for the business. So now what we can do is we can take that 100 and subtract it from the 1,000 if it's a business expense, and say that our income was really only $900, and then pay taxes on that 900 instead of the 1,000.
Now, a lot of people think when they write off, it's free.
Yeah. It's a famous scene in a TV show, too, where they're talking about who pays for it. And he says, the write-off people pay for it.
What is that? Is that a new lamp?
Yeah, I'm thinking of bringing homeware into the store, so that's a write-off.
That's a write-off?
Yeah.
Do you even know what a write-off is?
Yeah, it's when you buy something for your business and the government pays you back for it.
Oh, and who pays for it?
Nobody. You write it off.
Who writes it off?
I don't know. The write-off people. What? Why are we having this conversation?
See, and I mean, quite honestly, there's an idea of like, so like you bought your Tesla.
Yep.
And, you know, did you have to buy a Tesla? No. But the advantages of the write-offs on a Tesla are massive, especially because it is an expensive car. Yeah. And if you bring in a fair bit of income right out the get-go, or even like, you know, $1,000 a month you bring in, yep. Well, it's important to keep your receipts and manage those receipts. So what do you do with those receipts? How can you do things to set it off? I mean, you did one on a large scale with the Tesla, but on smaller ways.
Yeah, I mean, everything to me is a write-off. So client dinners are write-offs, going for lunches is write-offs, going golfing with clients, that's a write-off. You know, you talk about the Tesla and that's on a really big scale, but there was huge tax benefits to that because it's an electric vehicle. And look, we're not accountants, so technically like off the record, but you know, the Tesla was a write-off, and that's why I bought it, because ultimately last year it saved me ballpark $18,000 in taxes.
Which is crazy.
Well, which pays for the car for the first 2 years.
Yeah, I mean, it's mind-boggling to me because I think you don't have to worry about, you know, all these write-offs and stuff like that right at the get-go. I think it's important when you start to bring in some serious income, but it's good to get into that habit. So for me, I hated keeping my receipts. But if you can find an accountant or a bookkeeper, for example, my bookkeeper charges $300 quarterly, which isn't that much.
Yeah, my accountant charges $300 a month.
Yeah, see? So, I mean, there's different people. Mine take all of my receipts. So what I do is I take all my receipts and I ask for my receipt all the time. And I just throw it in my wallet. Yeah. And at the end of every night or, you know, end of every week, as it builds up, whether I forget or I don't, I'll throw it in a plastic box. At the end of every month, I will drop off that plastic box to a UPS store on the street, conveniently located where my office is, and send it out to my accountants, in which they will take all the paper receipts and do all the manual inputs from the receipts to the computer to manage my expenses.
Yeah, so a couple things on that. If you're listening and you're keeping your receipts, they may fade by the end of the year. So I hear if you put them in the freezer that it actually makes the ink stay on them. Yeah, so put them in a Ziploc bag and put them in the freezer. But
of course, Scott knows this, right?
That's a side note. But yeah, I mean, one thing I would say easier than that, because you will lose them all, is just take a picture, because ultimately the CRA at the end of the year can come and audit you. Like if you make $50,000 this year and you come back and claim that you wrote off $49,000, like the likelihood of being audited is fairly high. So I just take pictures of everything, because that way I have all my receipts, like they're in iCloud at this point. Well, now that I have a full-time accountant and stuff, they go right into an app that we use, and then they upload themselves and then they file them that way. But just take a picture of it and keep it in your photos, because that way, even if you miss something at the end of the year, if you're going through your credit card statements, figuring out, you know, can I write this off? As long as you have the receipt, yes, it makes it a lot easier.
Which does make a lot of sense. one of the areas that I struggled was I lost a sense of, as you bring in more money in your business, it's hard to manage it. And so when I created the spreadsheet, some of the things that I had was, I had the months on the top, and then I had all of my fixed expenses, then a line, then my variable expenses down below to the left side. And then I would input each expense as I went. So let's say I signed up for a subscription platform on Epidemic Sound or Artlist.
Subscription platforms, entrepreneurs' favorite things.
I know, right? It's $20, $30 a month, even $10 a month, whatever it is. I would input that number into that month when I was charged for it. And then I would just do that every single month. I would write down, where the actual company was underneath my fixed expenses, because it's a fixed expense. Because why?
Because you have it every single month.
Exactly.
Yeah.
Whereas a variable expense is something that you spend. Let's say, like typically gas is a variable expense, right?
Unless
or
you
at
have
least,
a Tesla.
Unless you have a Tesla, of course. Except you still have to pay for
Charging?
Yes.
Yeah.
$15.
Yeah.
So don't brag.
15 to $20 like once a week, so $100 a month compared to your $700 in gas.
Yeah,
that's okay.
I spent a lot of money in gas last month, and I mean, like even that's a write-off, right? So you have to look at that as well. But really, when you are starting to build your business, and even if you're not building your business and you're getting into a career, if you keep your receipts. And every night, I mean, it's so easy.
Yeah.
Takes 5 minutes. Every night, just throw all the numbers that you spent in that day into a spreadsheet.
Yeah, and one of the big things that we like to say too is fall in love with your bottom line, not your top line, because a lot of people get stuck when they look at their top line and they're like, oh my God, I'm bringing in $10,000 a month. But if you're spending $9,000 a month on business expenses, like that's great, but you're really only profiting $1,000. Now, it depends what you're writing things off for, and are they personal, kind of, but the business expenses, that kind of stuff. But, don't fall in love with that top line, because at the end of the day, it's great that you're making that, and kudos to you for making a great top line. But if you're spending $24,000 to make $25,000,
you got to ask yourself, are you better off just making the 1,000?
Right.
Okay, so one of the areas that a lot of people struggle with is cash flow is, how do I price my jobs? And we kind of talked about this off camera, but pricing jobs so down to the point of the cent. Please, Scott. I mean, listen, you could bore us to death with this, but hopefully it's a little bit interesting to some people. I mean, it is definitely interesting to me when you give me advice and you talk to me about it. So talk to us. What can you do to literally get down to the cent amount?
Yeah, well, I do everything in formulas in Excel or numbers or Google Sheets, whatever you want to call it. But what I do is I basically will look at the past 6 months, year, it depends how long you've been operational for, and look at what the monthly expenses are. And then from there, you total it up using formulas instead of using your iPhone, because you'll lose numbers if you do it that way. But you total it all up and then figure out, if I'm going to do 40 hours of work a week or 8 hours a day, it equals X amount of hours for the whole month. And then you divide up, that total cost by the number of hours that you're going to work, and you get this number that's ultimately your cost to operate.
Wait, let's break this down. I got Becca's iPad in front of me here. So I got to break this down, because if there's some people listening that are like me, they just completely skimmed over that.
Yep.
So
let's throw this up on a graphic next to me talking.
Yeah, somehow, some way. I mean, we've got some audio listeners here, but okay, let's say we're going to get $25, or you know what? Call it. I mean, you are just starting out. So let's say it's, $15 an hour. Okay. Right. It's like minimum wage right now. $15 an hour.
Yep.
Is your cost times 8.
Yep.
Scott, what is that a day?
Oh God. I don't know.
15 times 8.
120. I'm being told it's
$120. Okay. That's your cost per day. What's 120 times 5?
Yeah, but you have to pay taxes on that as well. So add those on there.
Okay. So what do we do there? Add 13%?
Well, it depends if you're collecting HST, if you're making over 30 grand a year. If you're making over 30 grand a year, collect HST.
Yes. Okay. It's $135.60.
Including HST.
Okay.
Yes.
60 cents. So now your cost In one day, what you should make if you pay yourself $15 an hour is $135.60 a day.
Yeah.
Okay. So let's say in my world you have a shoot that is 3 hours.
Yeah.
How much do you need to make? It's 15 times 3.
$45.
$45,
Yeah.
right? Plus tax, plus your 13%.
Yeah.
So you got to make $45 in 3 hours. Now,
Yes.
Scott, how do I also factor in Epidemic? Let's say Epidemic Sound, my music licensing software, is $40 a month. Am I going to factor that $40 into that one job?
No, so you're going to take all your fixed expenses and divide them. I do it divided by 30 days because, some months have 31, some months have 30, but that's what I do. I divide it by 30. So you're going to be at roughly like $1.10 per shoot or per day that you have to factor in of that.
Interesting. So there you go. Realistically, is this
Now, don't make the mistake either that you're going to work 30 days in a month.
I was just going to say,
Yeah.
So that's the other thing too, is so what you're doing is you're assuming that you work 30 days a month,
Right.
which
8 hours a day,
7 days a week.
which isn't going to happen.
Yeah, it's not going to happen,
No.
right? You're not going to be booked right at the get-go for that much. So you take the average amount that you work. And quite honestly, guys, you can't expect to get this down to the nitty-gritty right away. Like, seriously, you just have to sometimes guess your price.
Yeah, and
Right at the get-go.
most businesses aren't profitable for the first 3 years that they're in business. So at the end of the day, like, you need to do it for 6 months with just a basic understanding of what's going to happen, and then reevaluate after that 6 months as to, am I actually making money or am I just breaking even? Because, even in that first 6 months, you're going to realize I need this gear, I need this software, I need this sign, I need sign posts at listings in our case, I need photos at listings. Like, it's going to be a learning curve. And in another episode, we talked about J curves. It's the same sort of thing. Like, you're not just going to right out the get-go think, great, I got it all down to a science, so I can figure out my cost per hour is this. Like, it's great that you think you're going to be working 8 hours a day, 5 days a week, but unfortunately, you probably won't be. So
your Epidemic Sound isn't covered, because if you assume that, it's just not true.
Right.
So you really have to factor in the hours.
Right.
So let's say you call it 120 hours a month. Okay. Guesstimate over 6 months, figure out the average amount of hours you work a month.
Yeah. Well, like on your $40, if you're working 120 hours in a month, you have to charge 33 cents an hour.
There you go.
Yeah.
Which is, I don't know how you came up with that right away. There was not even a calculator in front of you, but I think they get the point.
Yeah.
You have to just work for, like, call it 6 months, price what you think you want to price, be competitive, because you're not the best at what you do right away. You're just not. Right.
And don't mistake this that you're going to get it right off the bat either, because we've all been through this whole learning curve of figuring out how to price something. If you need help, DM me, I'll help you.
Yes, Scott will seriously help you. And I mean, the guy knows a little too much about math. But I mean, hey, it pays off. It works. So you're not hopeless if your personality like me, and you're not hopeless if your personality like Scott.
Only a little bit.
Only a little bit. If you can bring in the business, great. However, you need to manage your cash flow. It's important because at the end of the day, like we said, you will get to a point where you'll bring in $10,000 and you'll have spent $9,500.
Yeah.
And then you're realizing over 6 months, oh my God, I'm not making any money.
And there might not be anything wrong with that either. Like, if you're spending $9,500 to bring in 10 grand, you might just have the problem of, okay, well, if I'm only bringing in 10 grand, I could just do this to make 15.
Correct.
Right? So it might not necessarily be getting that monthly spend down. It might just be optimizing something else to increase how much you're bringing in.
And I mean, we've had this conversation, is how do you optimize what you're spending now to really just be articulated throughout all of your expenses so you can pay for it through all of your jobs. And once you get busy, it's really crucial. Scott, do you have any advice for anybody else?
That's pretty much it. Like I said, DM me if you have questions, because I love math. This is my favorite thing to do. I'll give you a template for what I do.
It's shocking. He's going to give it to you for free. Do you know you'd have to pay a business consultant a lot of money for this?
Yeah, I wish I got paid to do this.
Anyways, ladies and gentlemen, thank you for listening and watching the Student of the 21st Century podcast. My name is Samuel Miele.
I'm Scott Fishman.
And this is our latest episode. See ya.
That's not a write-off. That's not a write-off. This? Not a write-off.